Welcome to AM Best Audio.
The Canadian individual life insurance market is growing, with new annualized premiums hitting a record 2.3 billion Canadian dollars in 2025, up 9% from last year, and policy counts rising 4%, according to LIMRA. Growth spans whole, universal, and term life products driven by smarter technology and faster sales. Even in a softer economy, insurers are finding new ways to engage consumers, setting the stage for continued momentum in 2026. I'm Lori Chortis for AM Best Audio, and joining us now to discuss that and other key insights from the research is Nancy Moussa, Associate Research Director of LIMRA Insurance Product Research. So Nancy, what drove the Canadian life insurance market's record growth in 2025, and why does whole life continue to dominate?
So the Canadian market has been trending upwards since about 2021, right after the pandemic hit. At the time, a bunch of people rushed out to buy life insurance, and carriers quickly had to implement some digital transformations to keep business flowing through the door amid all the social distancing protocols. Many carriers also increased their no fluid limits, and I think a lot of these measures that carriers implemented stuck around, and in turn, advisors are now able to reach more and more Canadians, and sales just haven't slowed down since. I also think right now we're in a pretty volatile market. And consumers, particularly the more affluent and older Canadians, they are looking for more guarantees, so more tax advantage accumulation. And if we look at the products that are really fueling the success of 2025, participating whole life products was probably the biggest driver. Participating whole life products accounted for 61% of the new year-to-date premium, and that portion alone was up 10%. So if we're looking at, why whole life continued to dominate the market, I would say there's a plethora of reasons for that. 2 out of the top 4 carriers are actually up over 30% if we're looking at participating whole life products. And I think these products are dominating the market. Once Canadians with higher income max out their registered accounts, participating whole life products become one of the only remaining tax efficient vehicles available. I also think in turbulent times, the guarantees that come with whole life products, so, the growth potential, the guaranteed death benefits, the guaranteed premiums, these type of features actually give people comfort. And I think lastly, the dividend options that are offered on whole life products, particularly the paid up editions, which is the most popular dividend option selected, is another very attractive option for growth potential.
What about universal and term life? What's fueling growth in those products? And are these trends sustainable in 2026?
Good question. So, in the Canadian life insurance space, we look at 3 buckets of products, right? So there's term, there's universal life, and there's whole life. So we've spoken enough about whole life. Universal life products is up 11%. And that was likely fueled by a few carriers putting in work to support their non-level cost of insurance products. And term is an interesting one. Term premium is up 5%. Policy sales were up 4%. And what's interesting is the face amounts are actually up 7%. So the growth here is likely a response to both inflation and housing prices increasing over the last decade. And over time, policy sizes are growing. So that is likely one of the biggest contributors to the term increase. So overall, when you look at all products together, total life insurance was up 9% in 2025, which is truly remarkable. Now, whether these growth trends are sustainable into 2026 is a tough question. But if you ask me, I think most of the forces behind the increase in sales in 2025 likely will remain in place in 2026. So I don't think the Canadians' tax framework is going to change much this year. I think the affluent households are continuing to max out their RSP contributions and their TFSA limits. So whole life products will likely continue to remain of interest to this demographic. I think sales in the term market may slow down slightly. We know this product line caters more to the middle market, and that market is a lot more sensitive to economic fluctuations. So I think with the current cost of living, I think this market will think twice before spending their discretionary income on life insurance. But I think overall, 2026 will be another good year.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Nancy, how are technology investments and digital sales improvements boosting premiums and policy growth?
So, Lori, at LIMRA, we host a meeting every year. It's called the Canadian Life Insurance Study Group, and it really brings one or two members from almost every carrier around the table, and we discuss industry trends and what we need to do as an industry to keep the insurance industry moving forward. And many carriers mention that some of their highest priorities in the coming years is advancing technological capabilities and digitizing their business. Obviously, AI is on everyone's mind as well, but really part of doing that is meeting the client where they need to be met. So we've seen it time and time again. Clients want to be able to shop online on their own terms, compare products, decide what they want. But when it's time to pull the trigger and make that purchase, they want to be able to speak to an advisor. And not to mention, we live in a world of instant gratification, right? So they want to be able to get an answer right away. They want their policy delivered ASAP. So advancements in technology will certainly reduce the underwriting times. Instant decisioning and e-delivery are what clients have been asking for and what they want. And I think carriers who are able to deliver these things while still remaining within their risk appetite, not only will they be able to reach more Canadians, but I think they'll also be able to place more business quicker.
In today's economy, Nancy, how are Canadian life insurers navigating economic headwinds while maintaining strong sales momentum?
Yeah, so I mean, honestly, if you look at just the sales figures alone, one wouldn't think there's any economic headwinds at all, right? But here's what we know. We know consumers are gravitating more towards permanent products, products that offer more guarantees, especially during uncertain economic times. So guaranteed premiums, guaranteed death benefits, tax advantage, cash accumulation growth. So instead of fighting economic headwinds, I think many insurers are aligning their product strategies. They're offering permanent products as a source of financial certainty when markets are feeling pretty unpredictable at the moment.
And Nancy, looking ahead, what factors will be most critical for sustaining growth in the Canadian life insurance market this year?
Great question. I think carriers will have to continue with the strong permanent life insurance product sales. So I think that product line will continue to do tremendously well. I think much of that will still be driven by the affluent market. And that doesn't change the fact that there's a huge coverage gap in the Canadian market right now. I think there's over 30% of Canadians that are either entirely uninsured or have some type of coverage but are still underinsured. So carriers will want to tap into that market and drive home the importance of adequate protection. And lastly, ongoing technological advancements in today's world will remain very, very important. So accelerated underwriting, digital applications, truly meeting the client where they want to be met, that will certainly help sustain the growth we are seeing in the Canadian market this year and keep it going.
Nancy, this has been fascinating, so insightful, and it's been a pleasure speaking with you. Thank you so much for joining us today. Greatly appreciate it.
Thank you so much for having me, Lori.
That was Nancy Moussa, Associate Research Director of LIMRA Insurance Product Research. For AM Best Audio, I'm Lori Chortis.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.